Forex Trading for Beginners, a comprehensive guide. Part 1. Introduction to Forex Trading. Welcome to the world of Forex Trading. The foreign exchange market, or Forex for short, is the largest financial market in the world, with over $5 trillion traded daily. But don't let its size intimidate you. With the right knowledge and tools, anyone can start trading and potentially make a profit. In this 5-part video, we'll be taking you through the basics of Forex trading, from understanding currency pairs to setting up your trading plan. We'll be covering key terms and strategies to help you get started, so you can feel confident and in control when you start trading. So whether you're a complete beginner or just looking to refresh your knowledge, this series is perfect for anyone looking to start trading in the Forex market. So let's get started. Part 2. Understanding currency pairs and quotes. In the Forex market, currencies are traded in pairs. This means that you will always be buying one currency while simultaneously selling another. For example, if you buy the EUR-USD currency pair, you are buying euros and selling US dollars. A currency pair quote consists of two parts: the base currency and the quote currency. The base currency is the currency you are buying, while the quote currency is the currency you are selling. The exchange rate is the value of one currency in terms of another. For example, if the exchange rate for the EUR-USD is 1.20, that means that 1 euro is worth 1.20 US dollars. It's important to understand the different currency pairs and their exchange rates, as they can greatly affect your trades and potential profits. Part 3. Types of orders and how to use them. When it comes to entering and exiting trades in the Forex market, there are several types of orders you can use to help you manage your risk and maximize your potential profits. One of the most common types of orders is the market order. This is an order to buy or sell a currency pair at the current market price. Another type of order is the limit order. This is an order to buy or sell a currency pair at a specific price in the future, known as the limit price. A stop-loss order is another important type of order that can help you manage your risk. This is an order to sell a currency pair at a specific price, known as the stop-loss price, in order to limit your potential losses. A take-profit order is also a great way to manage your risk. This is an order to sell a currency pair at a specific price, known as the take-profit price, in order to lock in your potential profits. By understanding and using different types of orders, you can better manage your risk and maximize your potential profits in the Forex market. Part 4. Setting up a trading plan. One of the most important steps in Forex trading is setting up a trading plan. A trading plan should include your financial goals, risk management strategy, and the specific currency pairs and timeframes you plan to trade. It's also important to consider external factors, such as economic events and market news, that can impact the currency markets and affect your trades. Once you have your trading plan in place, it's important to test it using a demo account before risking real money. This will allow you to make adjustments and fine-tune your strategy before entering the live market. It's also important to regularly review and adjust your trading plan as needed, based on your performance and market conditions. By having a solid trading plan in place, you can increase your chances of success in the Forex market. Part 5. Staying informed and continuously learning. In the world of Forex trading, it's important to stay informed and continuously learn in order to improve your skills and increase your chances of success. One of the best ways to stay informed is to read books and articles on Forex trading, as well as following the latest market news and analysis. Another great way to learn is to attend seminars, webinars, and other educational events that can provide valuable insights and strategies. It's also important to practice and test your skills on a demo account, and to be open to learning from your mistakes and trying new strategies. By staying informed and continuously learning, you can improve your skills, increase your chances of success, and become a successful Forex trader.